Let's talk about prediction markets. Think of them as a stock market, but instead of trading company shares, you're trading on the outcomes of future events. It's a place where speculation meets real-world questions, and anyone can participate. Instead of buying Apple shares, you buy shares in outcomes, like, will it rain in London next Tuesday? Or, will the next James Bond be a Muppet? The possibilities are endless, from politics and sports to pop culture and even bizarre hypotheticals. If you can imagine it, there's probably a market for it. Every possible outcome is like a stock you can buy or sell. You buy yes shares if you believe something will happen, and no shares if you think it won't. The more people believe in an outcome, the higher its price goes. Prices move between $0 and $1, reflecting the market's collective belief in the probability of that event. If a share for candidate X will win is trading at 60 cents, the market's saying there's a 60% chance. These prices aren't just numbers, they're a snapshot of what thousands of people, with real money on the line, actually think will happen. When the event finally happens, the market settles. If you were right, your yes shares pay out $1 each. If you were wrong, they're worthless. It's a simple, binary outcome: win or lose. No in between. It's a zero-sum game. Every winner has a loser on the other side. The twist: you have to put your money where your mouth is. There's no room for empty opinions here. Only those willing to back their beliefs with cash get to play. That financial incentive makes people think harder and research more. Prediction markets turn public opinion into a tradable asset, harnessing collective intelligence to forecast the future. The wisdom of the crowd, sharpened by the risk of losing money, often outperforms even the experts. It's not just talk, it's an answer backed by money, and this simple idea is about to become a very big deal. Imagine a world where the best predictions rise to the top, and anyone can profit from being right. Some say it's a $1 trillion opportunity. Let's see why prediction markets could change the way we understand, bet on, and even shape the future. Prediction markets sound futuristic, but they've been around for decades, just hidden away in academia. The Iowa electronic markets let people bet small amounts on elections and often outperformed pollsters, but these early markets were clunky, hard to access, and legally ambiguous. Regulators saw them as suspiciously close to gambling, so they stayed small and niche. Think of them as the dial-up internet of forecasting, slow, awkward, and for die-hard enthusiasts only. You needed to be a policy wonk to even find them. Their potential was obvious, but they lacked legal clarity and user-friendly tech. For years they were a brilliant idea waiting for their moment. That moment is finally arriving. So, what changed? 3 things: regulation, partnerships, and blockchain. Regulators are finally drawing clearer lines, letting platforms operate more openly. Mainstream partnerships are putting prediction markets on news sites and financial networks, reaching millions. And blockchain tech is making these markets global, decentralized, and transparent. Now, anyone from Tokyo to Toronto can trade on the same event. Blockchain also enables niche, long-tail markets and lowers barriers for users and platforms. Every transaction is public, building trust and attracting serious capital. These 3 forces, regulatory clarity, mainstream exposure, and blockchain, are pushing prediction markets into the mainstream. The superhighway is open. Wall Street is paying attention because prediction markets are powerful forecasting tools. Instead of hiring consultants, companies can get real-time, financially backed answers from the crowd. Prices on these platforms are dynamic data points, reflecting collective wisdom. Hedge funds use them to gauge political risk. Insurers use them to adjust models in real time. Blockchain-based markets offer global liquidity and fast capital flows, attracting institutional investors. Companies even use internal prediction markets to forecast project deadlines and sales. It's the democratization of forecasting, and big money wants in. What can you bet on? Almost anything with a clear outcome. Politics is the classic category. Elections, legislation, nominees. But you can also trade on business events, economic indicators, and sports. Want to bet on a company's earnings, oil prices, or a player breaking a record? There's a market for that. Even pop culture. Oscars, celebrity breakups, movie ratings. These fun markets draw in casual users and teach them the ropes. If you can imagine it and prove the outcome, you can probably create a market. The variety is the point. Don't confuse prediction markets with old-school gambling. While both involve risk and the possibility of reward, the similarities pretty much end there. The world of prediction markets is a far cry from smoky backrooms and spinning roulette wheels. Gambling is about entertainment and luck. Prediction markets are about aggregating information and forecasting. Instead of hoping for a lucky break, participants are rewarded for their knowledge, research, and ability to interpret real-world events. On a sportsbook, you bet against the house. The odds are set by bookmakers, and the house always has an edge. In a prediction market, you trade with other users, peer-to-peer. It's a marketplace of ideas, not just a game of chance. Odds are set by supply and demand, not a bookmaker. Prices move as people buy and sell shares based on their beliefs and insights. Information is king. The market wants your expertise, not just your luck. The more you know, the better your chances of success. If you know something others don't, you can profit and help make the forecast more accurate. Your insight actually improves the market's predictions. In gambling, inside info is cheating. Using secret knowledge to win is frowned upon or even illegal. Here it's the whole point. Prediction markets thrive on new information and sharp analysis. Plus, prediction market shares are tradable assets. You can buy and sell your position at any time, just like stocks. Buy yes at 30 cents, sell at 50 if the odds improve. You don't have to wait for the final result. You can lock in profits or cut losses whenever you want. It's dynamic, strategic, and attracts people who care about analysis, not just adrenaline. The thrill comes from being right, not just being lucky. The difference is fundamental. This is about being right, not just being lucky. Prediction markets are built for thinkers, not gamblers. Prediction markets reward research and insight. The more you dig, the more you stand to gain. That's why they're attracting a new kind of participant. People who want to use their knowledge to make smarter, more informed decisions, and maybe even change the way the world predicts the future. So, why is there so much hype around the idea of a trillion-dollar prediction market? What makes this concept so revolutionary, and why are experts so convinced it could reshape the future of finance and information? Analysts are projecting that prediction markets could reach the trillion-dollar mark by 2030, not just as platforms for betting or speculation, but as a fundamental shift in how we gather, process, and act on information. In a world drowning in data, noise, and misinformation, a forecast that's backed by real financial stakes is as valuable as gold. It's a signal you can trust, cutting through the chaos. As these markets become more deeply integrated with both media and finance, the number of participants and the amount of capital involved are set to explode, creating a feedback loop of insight and investment. Imagine a world where every news event, economic announcement, or even a heated public debate could instantly become a tradable event, with millions of people weighing in. The breadth of applications is staggering. Insurance, corporate strategy, finance, government policy, and so much more. The possibilities are almost limitless. The real value isn't just in the markets themselves, but in the high-quality information they generate and the smarter decisions they help people and organizations make. Prediction markets are rapidly evolving into high-efficiency forecasting tools, powered by technology and collective intelligence. Their prices could soon be as trusted and widely referenced as stock prices or bond yields, becoming a new benchmark for truth in uncertain times. In a world full of uncertainty, that's a real superpower. And in the world of finance and information, Superpowers are always incredibly valuable. The road to $1 trillion isn't smooth. Regulation is still the biggest threat. A single ruling could send the industry back into the shadows. Market manipulation is another risk. Bad actors could try to sway prices for political or financial gain. Platforms need strong safeguards and transparency to build trust. User adoption is a challenge too. Most people still find prediction markets confusing. Pop culture markets help, but mass adoption requires education and intuitive design. And prediction markets aren't infallible. They're only as smart as their users. Collective biases and bad information can lead to spectacular misses. High-profile failures could undermine trust in the whole concept. To succeed, prediction markets must prove their accuracy and reliability. The stakes are high. Prediction markets are at a crossroads. They could become a vital information technology, changing how we understand the world and make decisions. Imagine a world where market data is as essential as weather forecasts or stock indices. The optimistic vision. Prediction markets become the next Google, forecasting the future, not just searching the past. They could force more rational, evidence-based public discourse, but there's a risk. They could devolve into a speculative playground, dismissed as a complicated casino. Regulatory hurdles, scandals, or lack of public interest could stall their rise. The next few years will decide their fate. The potential is massive, but so are the challenges. One thing's certain, it'll be fascinating to watch. And yes, you can probably bet on the outcome.